Okay, let's unpack this. Today, we're taking a deep dive into Baidu's Q2 2025 earnings report. Our mission is to distill the most important nuggets about how AI is fundamentally reshaping this tech giant, what it means for Baidu's future, and crucially, what it could mean for you.
Exactly. And what's fascinating here is seeing how Baidu's strategic long-term AI investments are now truly playing out. You can see it right there in their latest financial results and their forward guidance.
Yeah, it paints quite a picture, doesn't it? Both challenges and, well, immense potential.
Definitely.
So let's start with the big financial picture for Q2 2025. Baidu reported total revenues of RMB 32.7 billion, which is roughly, what, $4.57 billion?
That's right. And that figure is actually down 4% year over year.
But it did tick up 1% quarter over quarter, so a little bit of movement there.
A slight uptick, yeah.
Yeah.
Breaking that down, Baidu Core, their main engine, brought in RMB 26.3 billion or $3.66 billion. That saw a 2% dip year over year.
And IQIYI, their streaming service.
IQIYI revenues were RMB 6.6 billion, about $926 million. That was down a bit more, 11% year over year.
Okay. So if we connect these numbers to their overall strategy, what are we seeing?
Well, you immediately spot a clear divergence. Baidu's online marketing revenue, which has historically been their absolute stronghold.
Yeah, their cash cow.
Pretty much.
Yeah.
It saw a significant 15% year-over-year decrease, dropped to RMB 16.2 billion.
15%. That's not just a slight dip.
No, it signals a deliberate strategic pivot. They seem to be actively, impacting their traditional, maybe more profitable revenue streams. The real story for Baidu Core is definitely shifting away from that legacy business.
And here's where it gets really interesting, because despite that big drop in traditional online marketing, Baidu is pulling off this remarkable balancing act.
They are.
For the first time ever, Baidu Core's non-online marketing revenue hit RMB 10.0 billion. That's about $1.4 billion.
Which is huge.
A massive leap, right? 34% year over year. And their CFO, He was very clear about this.
What did he say?
He said this growth was, and I quote, primarily driven by the boost of AI cloud business. That tells you exactly where they're putting their money and seeing results.
Absolutely. And that growth, it comes with some important nuances when you look at profitability. It's not quite straightforward.
Okay, how so?
Well, their GAAP net income attributable to Baidu was RMB 7.3 billion or $1.02 billion. That's up a healthy 33% year over year. Looks good.
Sounds pretty good, yeah.
But the non-GAAP figure was RMB 4.8 billion, about $669 million. And that was actually down 35% year over year.
Wow, okay, down 35%.
Right.
Why such a dramatic difference between GAAP and non-GAAP?
That's the key question, isn't it? The GAAP figure got a massive boost, like RMB 4.9 billion from something called total other income, net.
Other income.
Yeah, mostly from fair value gains and picking up earnings from their long-term investments. So a large chunk of that GAAP profit wasn't actually from their core day-to-day operations.
Ah, okay. It was more financial gains, not operational profit, driving that GAAP number up.
Exactly, which paints a different picture of the underlying business performance in the quarter.
And what about cash flow? Because investment usually hits that.
Right. And when you look at free cash flow, it was negative. Negative RMB 4.7 billion or negative $653 million for the quarter.
Oof, negative.
Yeah, but the company was upfront about it. They said it was primarily due to increased investment in their AI business.
So they really are putting their money where their mouth is, funding this transformation quite aggressively.
They are. And, the negative free cash flow might make you pause. But when you consider Baidu's overall cash position, it tells a different story.
They still have a lot in the bank.
A lot. They hold a substantial war chest.
Yeah.
Cash, cash equivalents, restricted cash, short-term investments. It totals RMB 124.2 billion. It's over 17 billion US dollars as of June 30th.
Wow.
And Baidu Core alone, if you include long-term time deposits, had RMB 229.7 billion, which is over $32 billion.
Okay, so they definitely have the resources for these big AI investments. This isn't a sign of a cash crunch.
Not at all. It's a calculated bet. They seem quite willing to sacrifice some short-term profit for that hypergrowth in AI. It fundamentally changes how you should view their financial health, right? It's less about the quarterly P&L right now.
And more about strategic resource allocation, like a tech land grab for the future.
Precisely.
That makes perfect sense.
Yeah.
So, okay, what does this all really signal for Baidu's direction?
It means they are absolutely, unequivocally doubling down on AI. CEO Robin Lai explicitly stated their focus is on AI initiatives that offer the greatest long-term value creation potential.
They're not just tweaking things, they're transforming from the ground up.
It's a complete re-architecture of the company around one core principle, artificial intelligence. And that transformation is spearheaded by their AI engine.
Let's talk about that engine, starting with their foundation models, the Ernie series.
Right, critical component. And the pace of model iteration is just faster than ever. Robin Lai noted these models are now reaching the stage where their deeper logic and greater creativity now enable them to propose entirely new solutions.
Sounds impressive. And leading that charge is Ernie 4.5, which they open-sourced back in June.
Correct, June 2025. And it's not just one model, it's a whole suite. 10 models across different architectures, different sizes. They excel in instruction following, world knowledge, even visual understanding.
So it's like a versatile toolkit for AI development.
Exactly. And what's particularly insightful is their application-driven approach, as Robin Lee put it. They've had this since Ernie first launched.
Meaning they're not just building tech for tech's sake.
Precisely. They're not just building powerful models in some lab. They're designing them for real-world impact. And, crucially, for monetization.
Any examples of that?
Yeah, a great one is their digital human technology is powered by Ernie. They had a 7-hour live stream with a top influencer.
Okay.
And this digital human generated tens of millions in GMV. That's gross merchandise value, the total sales value to help facilitate.
Wow, tens of millions from one live stream using a digital human.
Yeah, and get this. The digital human apparently produced the entire script. Dialogue, tone, even action cues.
That's incredible. A clear demonstration of direct monetization and real-world application right there.
Definitely. And they're not slowing down either. The next flagship Ernie version is already in the works. Promises significant improvements. Expected to launch, well, when it's ready.
Keeping it under wraps until then.
Seems like it. Plus, a new version of MuseSteamer, that's their video generation model, launched in July. And an updated version was planned for literally the day after the earnings call.
They are moving incredibly fast, like breakneck speed.
The agility is quite something. And beyond the foundational models, the AI cloud business is clearly a huge growth driver. It shows how their full-stack AI capabilities, as they call it, are translating into actual revenue.
Yeah, that AI cloud growth was certainly impressive, up 27% year over year to RMB 6.5 billion in Q2.
And it's not a fluke. Baidu AI Cloud was ranked the #1 AI cloud provider by IDC again in July 2025. That's the 6th consecutive year.
6th year running. That speaks volumes about their sustained leadership, doesn't it?
It really does. And the growth is fueled by what they describe as cost-effective end-to-end AI products and solutions.
Which raises the question, how do they manage that cost effectiveness? AI isn't cheap.
Good question. They point to a critical system engineering breakthrough, something involving large-scale stable deployment of pre-filed detailed separation architecture.
Okay, that sounds technical. Break it down for us.
Think of it like a super efficient modular design for running their AI models. It means they can handle many more AI calculations simultaneously, but using far fewer computing resources.
Ah, so better resource utilization.
Massively better. And that's not just tech jargon. It's why they can offer such cost-effective AI services. They've fundamentally lowered the cost of doing AI at scale for their clients. That's a major competitive edge.
And that cost efficiency seems to be driving adoption.
For sure. Subscription-based revenue and enterprise cloud, a big part of their AI cloud grew over 50% year over year just for the AI infrastructure part.
And they're using it internally too.
Oh yeah, their AI coding assistant, Comate. By July, it was helping generate over 45% of their new code. That's a huge boost to R&D efficiency.
45%, that's significant.
It is. And externally, look at Miauta, their no-code platform. Users have created around 200,000 applications on it without writing a single line of code.
Wow, that's really democratizing AI development, isn't it?
Like a big step in that direction.
Yeah.
Now, moving to their mobile ecosystem, Baidu is radically transforming its core product, search.
Right, this isn't just a minor update, is it?
Not at all. It's a profound shift. They're moving beyond just sticking AI summaries on top of results.
What are they doing instead?
They're aiming to, quote, completely replace static structural hyperlinks with intelligent, structured, and multimodal first AI-generated responses.
Completely replace hyperlinks. Wow, that's a fundamental revolution in how search works, moving away from just a list of links.
To providing comprehensive immediate answers, often multimodal, meaning text, images, maybe video, all integrated.
And how are users responding? Are people actually using this?
The metrics are pretty compelling. By the end of June, over 50% of mobile search result pages had AI-generated content. That was up from 35% in April.
Rapid growth.
Very. By July, it hit 64%. And this AI transformation reached over 90% of the Baidu app's huge user base, 735 million monthly active users, which itself is up 5% year over year.
So people are definitely seeing it. Are they engaging with it?
Seems so. Daily average time spent per user actually increased by 4% year over year in Q2. That suggests strong user acceptance, maybe even preference, for the new AI-powered experience.
Interesting. And they see search evolving even further.
Yeah, beyond just providing smart answers. They envision it expanding to completing tasks and connecting real-world services, using AI agents and multimodal content.
So moving from just finding information to actually helping you do things, like booking something or ordering something right from the search results.
That seems to be the goal. It's a huge shift in the value proposition.
Right.
Almost like, the internet moving from static web pages to fully interactive applications back in the day.
A big ambition. Now, beyond the digital world, Baidu is also making significant strides in the physical world with autonomous driving. That's clearly another major long-term bet.
Absolutely.
Yeah.
Let's shift gears to Apollo Go, their autonomous ride-hailing service.
What are the latest numbers there?
They reported over 2.2 million fully driverless rides just in Q2 2025. That's up a remarkable 148% year over year.
2.2 million driverless rides in one quarter. That's accelerating fast.
It really is. And by August 2025, they'd surpassed 14 million cumulative rides since they started. Those numbers speak to significant scale.
And they're looking beyond China now, aren't they?
Oh, yes. What's truly fascinating here is their aggressive global strategy. Apollo Go secured multi-year strategic partnerships, big ones, with Uber in July
Uber, wow.
and Lyft in August 2025. These are landmark deals. The plan is to deploy thousands of Apollo Go's fully autonomous vehicles on the Uber and Lyft platform
Thousands.
across international markets, starting with Asia, the Middle East, Germany, and the UK. It's a huge leap in their international presence and really validates their tech on a global stage.
And this is built on a solid foundation, presumably.
It seems so. Baidu claims leadership in both left-hand drive LHD, like in the US and Europe, and right-hand drive RHD, like in the UK or Japan robotaxi markets globally.
That versatility must be crucial for global expansion.
Absolutely. And they're already expanding their open road testing. In Hong Kong, they're moving into complex urban areas like Tongcheng and the Southern District. Plus, they started open road testing in Dubai and Abu Dhabi just this August.
Adapting to very different driving environments then.
Exactly. Which brings up an important question. How can they scale globally so confidently and presumably profitably?
Yeah, robotaxis are notoriously expensive to operate.
Right. But Baidu says they achieved positive unit economics in markets like Wuhan, where ride fares are actually much lower than in major overseas cities.
Positive unit economics even with lower fares. How?
A key factor seems to be their vehicle, the RT6. They describe it as the world's first and only production vehicle, designed especially for Level 4 autonomous driving. And crucially, they claim it has the lowest unit costs globally.
Lowest unit cost. Okay, that's a big claim.
It is. But, if true, that significant cost advantage, combined with their partners Uber and Lyft's established market presence in higher fare international markets, well, it positions them for potentially strong unit economics as they expand.
So the RT6 is kind of like their Model T for autonomous driving, designed for mass production and affordability.
That's a good analogy. It seems critical for scaling this kind of operation worldwide.
Okay. So with all this aggressive investment in AI and autonomous driving, the global expansion, the big question for many investors is monetization. When does this all start paying off significantly?
The million-dollar question, or perhaps billion-dollar question. Schwab and Lai acknowledge that AI search monetization is still, quote, early stages, not yet at large-scale monetization.
But they are testing things.
Yes. He said prudent small-scale testing in Q2 showed satisfying early results. They saw some QQ revenue growth from AI agents and digital humans within their online marketing revenue, but it's still a small percentage overall.
So still early days on the revenue front for these advanced AI features.
Definitely. And the CFO, Heiji and he, was quite candid about the short-term outlook. He indicated that revenue and margins are under considerable pressure in the near term.
Pressure. How much?
He specifically said Q3 is expected to be especially challenging, largely because of this very AI search transformation they're undertaking.
The transition itself is impacting the financials negatively in the short term.
Exactly. But he emphasized that the long-term upside is much higher. He sees potential for margin improvement down the road as advertising maybe recovers, and those non-advertising businesses like AI Cloud expand their profitability.
So it's a clear strategic trade-off then. Take a hit now for a potentially much larger payoff later.
That's exactly the message. They seem willing to endure this near-term pressure for the long-term strategic prize.
And are they offering any more clarity on when things might improve? Any forward guidance?
They are thinking long-term about shareholder value, it seems.
Hmm.
The CFO anticipates having greater visibility into next year and a clear outlook beyond the current quarters for the long term around the end of this calendar year.
So more clarity coming towards year end.
Hopefully. He also mentioned they're assessing ways to unlock the hidden and unstated value of our assets.
Unlock hidden value. What might that mean? Spin-offs? Strategic partnerships?
It hints at potential strategic moves.
Yeah.
Things to maximize value as their AI initiatives mature and their market position hopefully solidifies. They're keeping their options open.
Okay, so summing this up, we've unpacked Baidu's latest earnings, and it reveals a company really in deep transformation, wouldn't you say?
Absolutely. Deep transformation.
They're using AI not just to navigate these current financial headwinds, but to fundamentally re-architect themselves, building for a future rooted in intelligent applications and autonomous mobility. It's quite a compelling story, like a tech giant undergoing a sort of chrysalis.
It really is.
Yeah.
Which raises an important and maybe provocative thought for you, our listener. As AI increasingly permeates every aspect of our digital and physical world,
It clearly is.
will companies like Baidu, with these full-stack AI capabilities they talk about and this clear willingness to accept near-term financial pain for these profound long-term strategic shifts, will they be the ones that truly define the next era of value creation? Or are there perhaps unforeseen challenges lurking in this very rapid, very ambitious AI evolution that could trip them up?